How's it going, everyone? It's Sam. We've had a lot of volatility in the market over the last couple months, which is why I want to talk about stocks to buy and hold over the long term today. Now, I've done this one other time, and my video actually picked out some really good stocks that performed really well. And I realized that this is over the long term, right? So I'm talking 5, 10, 20 years on these stocks, but over the last 3 months since I made the video on my first buy and holds, they've done really well. And a lot of them are ones I still really like now. So I'm going to go over that one real quick. And then I want to bring 3 new companies to your attention that I didn't include in that last video. Now, what would this video be without talking about a way to make 10% APY easy? So I just got an email from BlockFi that they're actually increasing their APY on their stablecoin from 8.6 up to 10% APY for the next 3 months. So after that, it'll drop back down to 8.6, which is still a great amount. But I just moved over some money there yesterday. I actually moved over 3,000, but then I had to buy some Bitcoin because it dropped, and I really wanted to get up to 0.3 Bitcoin. So if you guys are interested, there is a link down below. They're giving you a bonus too, so you can get up to 10% APY on stablecoin. It gets paid monthly, so really nice offer that they have there. Also, there is a link down there to Webull in case you want to start trading on there. You can trade pre-market and post-market, and they give you bonus stocks, and they're giving a bunch of other stocks away all the time, like Tesla shares, Apple shares, like thousands of them. So definitely check that out down below if you're interested. So in my last video, I talked about Berkshire Hathaway. That was the first stock on this list. I really like Berkshire. The reason is they consistently grow year in and year out. So they grow about 10% a year every single year. That's what their goal is. They are a company that's just like a conglomerate of investments in all different blue chip companies. They've worked out really great dividends with some of these companies, and I really like them. I don't hold any of their shares right now. They're honestly a great company that I held for a while, and then when I saw other opportunities, I put money other places. But if you're looking for a company that you can just buy and not have to worry about, this is the one. Of course, you could always buy indexes, which is something that I should probably bring up too. Indexes do really well over time, but indexes are also at all-time highs while growth stocks are down in the gutters a little bit. So I think there's more opportunity in some of these stocks and some of these growth stocks. Now, the next one is JP Morgan Chase. And this is another company that's up at about $150 now, $150, and they consistently grow year in and year out. Of course, they have been hit hard the last year, but the banks are actually in a really good place. This one pays a dividend. Now, this is another company that's not going to see massive growth, but the point in this list isn't to give you the best, highest growth companies. These are companies that will grow consistently, that you can buy, bank on a 8 to 12% return year in and year out. Maybe they pay dividends, maybe they don't, but they're just companies you don't have to be scared about or anything like that. Now, of course, this isn't an all-inclusive list. I'm not going to include a bunch of penny stocks on this list either because of the nature of this video. It's not really going to be one of those videos because penny stocks you have to pay attention to a lot more. After JP Morgan Chase, we have Facebook. This one is over $300 now, and I hold Facebook. I've held it for a while now. It's gone up 20% since this video a couple months ago. I still think it's a good buy because they consistently grow year in and year out, and they're growing very fast for a tech company that's this large, right? From 2018 to 2019, they grew significantly. This last year, a lot of people were stuck inside. They grew significantly. Now they might not see growth like they did last year because so many people were at home. But to be fair, people were paying lower ad rates. So we might see a nice increase over the next couple of years in Facebook. It's really, I think, the most user-friendly for a lot of people that aren't used to social media. And how many people do you know that don't use Facebook at all but still have a Facebook? Like myself, I use it sometimes, but it's really just because other people use it and that's what they're on. I don't use it because I really like it that much, but I'm still on there every couple days just to respond to a random message here and there from people. So a lot of us still use it and we don't even really like it. So they're just getting us for life, and there's just going to be more and more people on the platform. So that is another company that I think is great. They also have Instagram. They also have WhatsApp. They're in Oculus too, or they own Oculus. They own a lot of different companies besides Facebook. Then we have the Walt Disney Company, and I've been talking about this one since $85. Of course, they have debt, but they're growing Disney Plus so quickly. They are beating all expectations. I think it's going to be a really good streaming platform. Now, in addition to that, we have the last one here, which is the Tattooed Chef. This is the only stock that's actually gone down since I talked about it in this video. And honestly, I think that this is still low risk long term. It was $25 there. It's very much lower risk now because it's in at $17. I've been picking up more shares, and I really like this one. They're growing 50% a year plus. I think they're going to continue on this growth rate for a while. Maybe not 50%, but they're going to continue at that 30% plus mark for years down the road. And their price to sales ratio right now is only about 6, which is significantly less than it was before. So that's a forward price to sales ratio, not bad when you consider it compared to some of its peers. Now, the next company that we have to take a look at, these are the ones I haven't talked about before, in this video at least. I've talked about them in a couple other videos, and we're going in terms of lower risk to higher risk but higher reward. So I think the lowest risk one on this list is Teledoc. Now, Teledoc has grown very quickly. From 2013 to 2014, they doubled, then they almost doubled, then they almost doubled, then they almost doubled, and then they almost doubled, and then they've been consistently growing like crazy. Probably saying doubled too much there, but last year they had a huge bump. They had the pandemic. A lot of people wanted visits, but they didn't want to actually go in person because they were worried about their health. We're still seeing that lingering this year. Like, a lot of people are still considerate of what's happening. I think, though, what people are going to find is it's just way more convenient not to have to go to a doctor's. So there are certain things that you just don't need to see a doctor in person for. Like, a lot of the time when I go to the doctor, they're not really looking at anything, or they're not really, I guess, touching anything, because they can still look at stuff through a camera. Sure, sometimes the camera might not be high enough quality, or maybe they want to see in person. But a lot of the time, they're not really doing a lot. I mean, they're talking to me about my symptoms, and I think a lot of this can be solved through Teledoc. I mean, it's much easier just to set up an appointment on your phone, get a notification that they're ready, and then have the appointment in like 10 minutes, 15 minutes. How many times do you go to the doctor and they see you for like 4 or 5 minutes, if that? And it takes 2 hours. By the time you get there, or you drive there, you get there, you fill out paperwork, you wait, you see the nurse, you wait, you see the doctor, you wait, you leave, you have to drive home. It's just a big pain in the butt. So I think they'll continue to grow. They're really the leader in this space, and they have come down a lot from their highs. $1 billion worth of revenue over the trailing 12 months. Their market cap has come down significantly because they were around $280, $290. Now they're at $180, so they're down to about a $28 billion market cap. So still a high price to sales ratio, but I don't see this thing losing growth for a number of years. I mean, think about how large the whole medical industry is and how much time people can save with this. So I think this is a company that will be here to stay. We also have MP Materials, which is the next stock on this list. The reason I say this is a little bit higher risk is for the fact that it's really hard to gauge MP Materials. Like, we see their revenue growth of 100% year over year. We saw adjusted EBITDA grow 300% to 18 million. That's great. They mine for rare earth materials. So rare earth materials are used in a lot of our technology, like our phones, computers, batteries for electric vehicles. China controls the majority of the market. MP Materials controls 75% of the market that's outside of China. So the US government is really backing this company, but you're projecting so many years out. I think it will be a winner, but it's really hard for me to project what kind of revenue they're going to be doing years down the road. So that is why I'm a little bit more cautious on this one, but I still think it's going to win long term. It's just hard to say, is it going to 2x in the next 5 years, or is it going to 2x in the next 10 years? Is it going to 5x in the next 5 years? It's hard to tell for me. The next company is actually a hedge. So I'm going to put two companies in here. Both of them are here for different reasons, but they're related. CLSK, which is a Bitcoin miner, I think will have extraordinary revenues over the next year. And if Bitcoin continues to do well, I think this is going to do swimmingly. I'll use the word swimmingly for years to come. They're going to mine a ton of Bitcoin. Price of Bitcoin has been steadily going up over the last year, so we should see this bring in a lot of revenue and a lot of profit too. Now, Bitcoin dipped a little bit, but it's normal. I mean, it dipped to 50,000. It was at 64,000, but we've seen so many months where Bitcoin consistently went up. It's probably good for it to dip a little bit so that we don't just see pandemonium. But this company is growing so quickly. I would suggest you search my channel for CLSK or Clean Spark and watch some of the videos on it. They should grow revenue significantly. But if that's too high risk for you, because this one almost doesn't fit this profile of buy and hold stocks because it is really low market cap. It's 650 million. You could go with something like Coinbase. So this one is a polarizing company. A lot of people dislike it. A lot of people say it should be like a $100 stock. A lot of people say it should be a $1,000 stock. So it all depends on where you think crypto is going to go and what you think about the race to the bottom in terms of transaction fees on crypto. But if you're interested in crypto, Coinbase might be the way to go because it takes advantage of the whole crypto system, not just Bitcoin going up in price, but any volatility in the market. Anyone that's interested in crypto, which there are more people every single day that get interested in it. You'd be surprised how many people search for new cryptos all the time and are moving money from one to the next to the next to the next. So many people are bringing in more money either because they're earning money and putting it in crypto or just new people hearing about it. Coinbase takes advantage of that and they're growing really quickly. They're very profitable. Of course, it's a little bit riskier. That's why it's at the end of the video. Like I said, a little bit higher risk, higher reward. But if you're bullish on crypto, I think this one is a good one to play over the next 5-10 years. Now, of course, anything can happen. This could fall down to $200 in the next 2 months, but I think it is a company that's going to do really well over the long term. Now, of course, I could be wrong on any of these picks. I'm not a financial advisor. I'm not a stock analyst. Do your own research and due diligence. Thank you guys for watching. If you guys want to see exactly what I'm buying, you can check out the link down below to Patreon. There I tell everyone what I'm buying and selling. I give pre-market or right when the market open updates, and then after it closes, updates. Also, there is a link down there to BlockFi to get that 10% APY and a link down there to Webull. Thank you guys, and I will see you in the next video. Let me know what stocks you like as long-term buy and holds down below. Bye.